move back from a clear vision of what we want to do because of the problems in the Eurozone. We've got to solve the problems of the Eurozone. The problem of the move of Eurozone peripheral bonds away from risk-free status, that's something that we've got to deal with by having a vision of how to deal with all the problems of the Eurozone, rather than something that can necessarily be fixed within the LCR. I think the one thing which we do need to now debate within the LCR, and this gets to the level 2 assets, the 40% assets, is I don't think we have fully thought through to what extent we are willing to allow allowance for contingent central bank liquidity insurance. Because clearly, at the limit, a central bank can provide liquidity. And if it is willing to provide insurance, then that is liquidity which is available. I'm absolutely sure that we should stick to the fact that the core of liquidity in the numerator, in the buffer, should be the stuff which is undoubtedly liquid in all states of the world in the private market without the central bank. But I think when we get to level 2, that is an issue, and I would think which we've defined as an issue, which we now need to think more deeply about.
Thank you. Colin, would you like to add to that?
Well, sir, I won't add to that. That's very clear. I'm sorry that you took that away. The point I made about costs was a secondary point after a lot of other points. It is clear, though, that the point I'm making is that whilst the industry is more than prepared to pay the cost of prudent regulation, which we fully support, there is a miscoordination of regulation which is causing incremental cost. If you look at the US versus Europe, the US, 75% of financing is now done via the capital markets. That's a ratio of 4 to 1 compared to what it was 25, 30 years ago. The inverse is true in Europe. So as we get functioning and efficient capital markets, we reduce the cost to investors, to taxpayers, to borrowers. My point merely was that incremental lending costs as a result of overburden regulation could be avoided. It was not the main thesis that I was proposing.
Thank you. Mikasa?
Yes, I would like to pick up two questions. And one is about the higher capital, the cost of higher capital and so on. First of all, Japan implemented the Basel II regulations much quicker than other countries, and we are now implementing Basel III ahead of other countries again. So that was one of the reasons we could not be involved in this round of crisis. But at the same time, I don't know, but of course, the more capital can be complement or can be better than the detailed rules. But at the same time, is higher capital ratio panacea again? And it's not. Even if we have a higher capital ratio, if banks conduct a very excessive leveraging and risk-taking business, we cannot prevent the crisis even if the banks have a much higher capital. So again, I think we really need a good balance of the higher capital buffers and also the good regulations and discipline by banks themselves. The second point is about the linkage between financial sector and real sector. Once I was asked by friends why the pay of financial industry is so high, and compared to the people who are working for, health, medicine, and factories which are making efforts to make things better, the bank, trader can get a huge amount of money just by instant idea or whatever. But I think the reason I can find is the financial industry is involved in the very important, again, the work of allocating resources to the most productive part, and the finding functions of a new source of growth is the function of the industry. So that's why they should be paid, and they should be clever people. I'm saying this because I envy, in a sense, financial sector, because although we are in charge of allocating resources in the government, we are not paid as well. But the reason the financial industry is paid well is because the work is important. But at the same time, it should be linked to real, real economy. It doesn't mean that the financial asset ratio to GDP should remain the same. From the period we invented money, the financial asset to GDP ratio has climbed up constantly, and it is, the proof of the efficiency of the market of finance. But if once it jumped abruptly, deviating from the trend, we should be more worried. And that's what I want to say about the prudent macroeconomic policies regarding financial stability.
We have time for another short round of questions. We have two of them. Go ahead, please.
David Milliken from Reuters. A question sort of primarily aimed at sort of Adair Turner, who talked a little bit about the need for more unconventional monetary policy from the Bank of England. And I was wondering sort of what he had in mind, whether something that was more unconventional was needed now, and what kind of form that might take. For example, cancelling sort of the value of the holdings of gilts that the Bank of England already has.
And before
Phil Aldring from the Daily Telegraph, sorry. We seem to be hogging the stage a bit. Lord Turner, you mentioned that there were two things that could help the economy, one of which was a repeat of the 2009 US recapitalization program. I just wondered how realistic you think it would be for that to happen now that we're not in the teeth of a crisis, whether we could do that.
did you all, one of them, Adair, was directed to you.
Well, I think they both were, but I hope other people will comment as well. I mean, on the latter point, I think that's a very good point, the teeth of the crisis point. I mean, I have to say that if I could roll back to 2008 all over again, and if I knew now if I'd known then what I knew now, I would have argued for us doing more dramatic capitalization of our banks at the point where we had the opportunity to take them up to a higher level. I think one would ideally have got them up to the level that you want, plus the counter-cyclical buffer, so that you could then say, you've got the counter-cyclical buffers in place, and we expect you to run these down over the next 5 years as we go through a recession. And I think it is very difficult to do that, except in the crisis. So I was trying simply, in my comments, to say, what are the logical set of possibilities to address this issue of the resilience, the fact that we want to build the medium-term resilience, but that some of our measures can be harmful for short-term lending growth, which is for instance, in the operation of the UK's Financial Policy Committee over the last year, is a conundrum we have endlessly struggled with. On the question from Reuters, I mean, the whole point of my speech the other night on unconventional policies was to provide a justification of what we had done over the last 3 months in terms of a combination of unconventional policies. I pointed out that there are other things that can do. As for the specific idea of cancelling gilts or permanent monetization, I will say that was reported by my good friend Robert Peston, but it was Robert's idea, not my idea. And I think that should be very clear. And I think that's all I say for now.
Thank you. Anyone else? Colin?
Nope.
Terry, your idea good idea of culture playing a big role in this whole solution to these problems. Who would direct that? How could it come about? Does it start in kindergarten? Do you wait for a generation, or can something be done now by regulation, law, supervision, moral suasion, jail sentences?
I think there's the capacity in place now through the supervisory process and the regulatory process to start to heighten the awareness of the need for that change and to encourage boards of directors and management teams to to start moving in the right direction. And I think, as Colin mentioned, some of that has begun. We've seen it in a couple of institutions already where they are making adjustments along the way, both in terms of lines of business and other things. It's early stages, but I think we've got to lean on that. We really got to rely on more of a perspective. We've got to focus on the fact that, you know, we've moved from a system where 70% of all of the lending that used to take place through this nice little prudentially overseen box prior to the crisis, we're down to about 25%. That we moved from a system where we had a reliance on traditional credit analysis to one where we relied on collateral. We outsourced the evaluation of the collateral. We have a system that was funded by intermediaries. It's now financed by markets. And the management perspective reflects all of that. We've got to get back to a system where there's much more of a focus at the top on recognizing that the balance between risk-taking and safety and soundness, you know, we've got to tilt a little more towards safety and soundness. Somebody asked a question suggesting that, you know, a trade-off between innovation and safety and soundness. We need to look at the fact, it's a bit of a red herring. We need to look at the fact that the aerospace industry is probably the most heavily regulated industry in the world. And it's also one of the world's most innovative. And the fact of the matter is that there's a shared set of objectives that focuses on the fact that above all else, you know, what goes up has to stay up until it's designed to come down. So there's a real focus on safety. That shared sense of objective, I think, has gotten a little bit lost in the financial services arena.
Nobody worked out whether these CDO squareds were going to fly or not.
That's right.
Yeah.
Of course. Well, I wish we had more time, but we do not, and we have to thank this panel. I thought they were just wonderful in the way they could explain the situation.